Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's September 16th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So I went to a place called Ashley Furniture a couple of days ago. So Ashley's a big furniture brand, actually ranked #1 home furniture retail in North America, which has over 800 showrooms. They have a very big presence in the South, especially Florida. I never really heard them in New York, but in Florida, they're very, very big. And since I've been living in Florida, we ordered lots of furniture from these people. So we're a really good customer of theirs. Now, we're getting a new dining room and bedroom set because they're about 15 years old each. Need a little bit of an upgrade. And we ordered that, believe it or not, 2.5 months ago. And it still hasn't been delivered. But I get it. I mean, it's COVID. Everything's on delay. You get supplies different places. I understand that. I get it. Try ordering anything. It's going to take a long time. If you're doing your Christmas shopping, guys, start doing it now because it's going to take a few months to get to your house. Seriously. It's crazy. But my wife and I went there a few days ago, and we were looking to get a new TV stand, 2 end tables, and a coffee table. We just painted the walls, right? A couple upgrades to the house. You know, look a little nice and sweet. So go to Ashley, walk into the store, and right away when you walk into these stores, you know how it is. I mean, these guys just they come up on you like immediately. It's crazy, right? It's like, let me help you. What do you need? And it's just, you're like, here we go. Anyway, and the kid kind of looked like a little bit of a shady guy. But I said, you know what? Let me play along. You know, he's like, how can I help you? What are you looking for? And I tell him, listen, we need 2 end tables, TV stand, a coffee table. He's like, I know exactly what you need. Just what you want. I'll show you a whole bunch. So he goes, to different parts of the showroom. It's a pretty big place. And he starts showing us different things. And my wife and I fell in love with one set. It was all set together, all the same color, looked really, really cool. So, he does his thing, which salespeople do. He figures out the pricing, throws in all discounts. I'm going to take care of you. And he goes, you know what? With everything, delivery, everything that you need, warranties, it's $2,800, which seemed like a lot of money to me. I mean, 2 end tables, TV stand, coffee table. It was nice, but $2,800 just seemed like a lot. So I told my wife, so you know what? See if they have anything going on online where they might have a special, and we do that a lot with stores because they'll have a 10-15% special out of nowhere. You just got to log on to their account and whatever. So wife starts looking into it. And by the way, my stuff is great with stuff like that. She's like an investigative reporter. She's quick. She can find anything, which is, incredible. But this is what she loves to do, right? She loves this part. So she figures all this out. She starts adding up the prices, looks online, and figures out how much everything's going to cost together for the same exact furniture that's on their website. Remember, this guy quoted me at $2,800. It came to $1,300. The same exact furniture that this asshole just quoted me for $2,800. So as she's looking online and showing me and telling me, this guy's still talking. And I'm letting him talk. Basically, digging his own great talk. How he can get this as fast. It's a great deal. We have it in stock, all this. And then I was like, all right, enough's enough. So I call him out. And I say, listen, buddy, everything you just showed me is retailing on your website, Ashley website, for $1,300. But you're quoting me for more than double that. And he knows he's caught, but he's trying to kind of just, find a way that he can get away with it. When you see someone that's just caught lying or whatever, he starts looking through his notes, he's pausing, keeps digging, and I'm not letting him off the hook because I'm pissed off because we bought a lot of furniture at this place. So I tell him, I said, look, I'm going to be honest with you. I'm really pissed off since I'm a great customer that you quoted me for $2,800 for furniture that's going for $1,300 on your website. So you know what he tells me? He goes, yeah, but the good thing is we always price match. I said, and I said this to him, excuse me, I said, it's your own fucking site. It's your own site that you're price matching. You price match other people's sites. I get it. Best Buy, Amazon, Walmart. I get it. This is on your site. On your site that you did not tell me about. So then he starts going into, he tells me about Ashley Furniture Stores, individually owned, well, the website is corporate. And look, I understand that. If you're charging me 10% more, you're in store, I get it. Online can be cheaper. These guys have to make money, a little bit of commission, but more than double this kid. And how fucked up is it? More than double he quoted me. And I'm just looking at him, and he's looking at me. I'm like, really? But looking at the bigger picture here, and stay with me. There's a reason why I'm telling you this story. I started doing some research on Ashley and realized its parent company owns the online operations. It's actually called Home Store. And they have 800 stores. Now, most of the home stores, the Ashley Home Store, that I went into, so they're called Ashley, but it's really Ashley Home Store. The Home Store owns online. But all these stores are independently owned. So they have to buy all the furniture from Ashley Home. Think like a franchisee. Buy all the furniture from Ashley Home, which they manufacture by themselves. Two brothers own it, making a fortune. But then these owners, I guess, have the right to sell these items for whatever fucking price they want to and mark it up, and they're going to make all that money on the commission. If you don't know better, that, hey, let me go online and just check this out to see where it is. So it's not like McDonald's makes royalties from the owners and the franchises. They're going to send them all their product, the burgers, the french fries. They send them everything, right? They set them up perfectly. But the franchise owner for McDonald's, he can't sell a Happy Meal for $20 when it's priced at less than $5 everywhere else it's being advertised. But when I look at this model, which I'm sure there's tons of businesses out there doing this, especially in the furniture industry. The reason why Wayfair is where it is. Look at Wayfair. Look at their stock. Everyone's ordering stuff online. I actually went to Wayfair, and I understand why it's such an amazing site. And right away, 10% off because you're a new customer. You know, constantly just the algorithms there and the AI. It's just they're sending me stuff that they know I'm going to like, which is really cool. There's a reason why that stock's so high. When I look at this model, you realize, especially with Ashley stores, they'll never, ever, ever be able to compete with online again. And it was always that way for the world to see. Online was cheaper than big box. We understand that. And online was like, we kind of need big box too, right? You have Amazon opening up stores. Apple opened up stores. Microsoft opened up stores. Tesla opened up stores, big box. Because they knew that some people want to go there and pick up their items. But with online operations, I don't have to go over the specifics with you, but you know why it would be so much cheaper. You have to pay for rent, fewer employees, less health care. But online, we all knew was cheaper than big box. But not everyone took advantage of it. And hear me out here, guys. In fact, hardly anyone took advantage of online shopping, which sounds crazy. It sounds crazy to any one of us who's ordered something on Amazon, ordered something online, and got it delivered to us. Because when you look at e-commerce sales, so e-commerce sales has been a secular growing trend for a long time. What does that mean? It's moving steadily higher year after year after year after year after year. It's not cyclical where during certain times a booming economy it does well, and then when it's a weak economy it doesn't do well. It's a secular trend that's been growing. More and more people will go online. But do you know how much actually is a percentage of total retail sales of the U.S., which is a little over $5 trillion? It is retail sales. I'm using data from the U.S. Census Bureau, which includes gasoline, which you're not going to be able to buy online, but it includes everything. But do you know how much? I want you to think about it in your head as a percentage of total retail sales in the U.S. come from e-commerce. They have that number. In 2010, it was just 4%. 2014, it was 6%. In 2016, it went up to 8%. By 2019 year end, it grew to 11%. That's all the shopping that's being done online. I would think it'd be a lot more than that, considering the discounts that you get. But it's just 11%. What does that mean? It means it can grow incredibly. Now, in 2020, this year, as of Q2, so this is the end of June, that quarter was at the height of COVID. E-commerce sales came in at $211 billion. That was 44% higher than last year's comparable quarter. And you know what else? That 44% is the fastest growth rate. This is unbelievable when I look this up. The fastest growth rate we've seen for e-commerce sales since before the dot-com crash. So we're looking at 1999. You're looking on an annual basis, e-commerce sales have not grown this fast since the pre-tech bubble, the dot-com bubble. You have to think about that for a minute. The internet was still in its infancy back then. You could argue it was in the very first inning in terms of growth. I mean, Netflix and Google were, what, 2 years old? Netflix was still sending DVDs to you in the mail. I mean, streaming didn't exist. Tencent, the largest tech company in China, was 1 year old. Facebook, Twitter didn't exist then. The iPhone wasn't even invented yet, right? It was like 2007. No social media, no streaming, no cloud. We weren't even on 3G yet. Verizon became the first company to launch a 3G network, and that was in 2002. So throughout this whole entire period, right now, this growth has been faster than any other time dating back to pre-dot-com crash. So you're looking at, for the quarter, the total retail sales for Q2 was $1.3 trillion. So if we times that by 4, it's a little over $5 trillion annually, number I mentioned you earlier. And if you take the $211 billion of e-commerce sales of that $1.3 trillion, it amounts to 16% of total sales now for e-commerce. Guys, from 11% to 16%. That's in an industry. We're not talking about a company increasing sales. We're talking about an industry that's been growing at every couple of years, a little higher, a few percent. Now it's 16% of total sales. And it's a tectonic shift, an anomaly, deviation, divergence, whatever word you want to use, but something that nobody could predict or forecast. I mean, it seemed like it seemed like it because it's a certainty now. But people say it's a mathematical uncertainty. Like, nobody could predict how fast this would grow. Now, why did it happen? We all know COVID. Staying at home, they close all these shops. That's the obvious answer. But it's much, much more than that. And once you understand this, you're going to realize that a lot of these high-flying names, they're going to go a lot higher. And you're also going to realize that we're not even close to being in a bubble. Not even close. And we hear that mentioned. That's a question they ask almost every guest now in CNBC and Fox Business. Do you think we're in a bubble? Do you think we're in a bubble? Do you think we're in a bubble? You could argue we were in a bubble in 1996. You could argue we were in a bubble in 1999. From 1999 to the peak in 2000 in March, the NASDAQ doubled. And people thought we were in a bubble in 96. And a bubble is a rational exuberance. It's people buying stuff they don't even care. These are companies that are seeing unbelievable growth. They're seeing demand. They're seeing sales explode. They're seeing earnings explode. Look at the numbers. And why is this happening? Because staying at home, and this is the bigger point, it forced people to buy things online for the very first time. I know it's going to sound crazy to some of you, especially those of you who shop Amazon a lot. But there's a lot of people that aren't on Amazon. But these people didn't have a choice. If they wanted things, they had to go online. They were forced. They were forced to change their behavior. Pretty big deal since we're creatures of habit. We hate change. We all hate change. And we like to do things the way we like to do things. And we hate when people tell us an easier way to do something that we're used to doing, right? Oh, you can do this so much easier. My iPhone is so slow. Well, you could pay for storage, keep it on the cloud. Apple makes it pretty easy, charges a few dollars. People don't want to hear. You pay your cable company $150 a month to watch whatever, Chicago Fire. Forget about Chicago PD. Anything PD is gone now. We all know that. Those are the rules. Every PD. Unbelievable. Taking in cops out of cartoons. Insane. Anyway, but now you can stream it online. You can save a ton of money. Back in the day, millennials, you're not going to remember this. We used to go to travel agents to book trips, and some people still do. But everything can be done in 5 minutes using Expedia Priceline, but some people still have a travel agent, believe it or not. So they're traveling internationally. What about using a full-service broker? That was the norm. They used to charge you a fortune. You still kind of need one if you want to get to private placements. You like to have one at Goldman Sachs, which you're going to get into a lot of great deals. But now you can trade online with no commissions. Where am I going here? Why am I saying this? These examples provide an easier, cost-efficient way to consumers. But they're not necessities. All these examples I just mentioned were not necessities. People still going to use full-service brokers. They'll refuse to put all the pictures, downloads on cloud. They'll continue to pay cable companies a fortune when you get the same service for a huge discount. And yes, some people will still use a travel agent, believe it or not. It's not a necessity to them. You don't have to do that. So you're not being forced into something. They're not being forced to change their behavior. This time is different. People who never used Amazon before, and there's a lot of people, believe it or not. It seems like everyone, but there's a lot of people. They just figured out they could order paper towels, milk, sanitizers, order it online and have them delivered at their doorstep in a day or two. And they could reorder them automatically every 2 weeks. And the best part, it's cheaper. I don't have to run out to a grocery store and worry about catching COVID, which is a big deal to people in a danger zone over 65 or have underlying conditions. But you want proof of this? How many people, and be honest with yourself, how many people do you know that talk about the massive amount of boxes they are getting delivered to their homes now from Amazon? Tons of people. Everybody talks about it. Nobody really talked about that before. I have heard that dozens and dozens and dozens. Oh my God, I got to see the Amazon boxes. And it's reflected in Amazon's numbers. Pretty easy. Amazon, did you see Amazon's numbers? And this trend of more online shopping, it's just the beginning. We're at 16%. We know COVID's going to, things are getting better across the board in the U.S. We see it in COVID in terms of statistics. Hospitalization rates are coming down. Death rates as a percentage are coming down tremendously. All the danger spots, Florida, Texas, whatever. All okay now. Numbers coming down. But New York, California, stay closed. So sad. The USC has to beg their freaking mayor to play football. Leave it up to them. If there's certain people that don't want to go there and they worry about COVID, it's fine. But if you look at a demographic and you look at their age group that catch COVID, they have a better chance of dying from the flu. Okay? Enough with the politics, enough with the bullshit, especially California, New York. You're always going to be Democratic. You don't have to worry about losing votes. Just do the right thing. Because you're messing with people's lives. Sorry, didn't mean to go on a tangent there. But you're seeing COVID numbers get better, which means businesses are going to open back up in terms of those brick and mortar places. Even New York said, you know what? After 6 months, we'll allow indoor dining at 20%, 25%. It's too late, Mr. Cuomo. It's too late. All these companies are out of business already. We've been open up in Florida since May. All the numbers are getting better. We're fine. Things are cool. We're practicing social distancing. You're late to the trend. That's okay. But brick and mortar, you're seeing more and more stores open up. You're even seeing hair salons, gyms, movie theaters. Places that you thought would be closed, they're starting to open up. But do you think older folks are going to run back to shop at big box retailers anytime soon? Especially now they learned about online shopping, and so many people have for the first time. Again, it was only 11%. 11% of retail sales. Now it's 16%. Unbelievable jump in a number like that. Unbelievable. But you think they're going to run back? If I was over 65, listen, I talk about why people should be going out. Yes, they should be practicing social distancing. If I'm over 65, it's a different story. That's why we shouldn't have guys like Fauci, close to 80, making decisions for us as someone that's in a danger zone. If you look at everybody making these decisions, even, Pelosi's 80, Trump's 74, 73, Biden is 77. These are the people we want making decisions about COVID when they're in that danger zone. Are they're at significant risk compared to the rest of the population? Absolutely not. But those older folks aren't going to run out. They just realize, wow, I could spend money on Amazon and get everything delivered to my doorstep. If I want to get out, I can walk around the house. I can go to a park and I don't have to worry. I don't have to be in front of people where you might have one of those assholes say, I don't need to wear a mask. Doesn't matter if you believe the statistics or not. Just wear it because you're going to make that older person feel more comfortable. Isn't that worth it? Then fighting about it and telling everybody why they're wrong in statistics, who cares? You really don't know. We really don't know. There's a million studies out there. We really don't know if masks help. Believe me, I looked at all the studies. You really don't know, but I'm wearing a mask. Why? Because it makes people comfortable. And if I was older, I would hope other people wear a mask because I'd be worried. So where am I going with all this? Those of you who believe we're in a bubble, those of you who believe the rally in names like Overstock, Amazon, Wayfair, Netflix, Nvidia, Etsy, Square, Datadog, Cloudflare, CrowdStrike, Zoom, I could keep going. If you think the rally is over in these names, you're absolutely crazy. And even throw in there the big box retailers that have the best online operations, the Walmarts, the Targets, the Best Buys. These are names being driven by growth. They're not being driven by valuation, not being driven by fundamentals. We know that. You're looking at what trends these guys are in. They're in AI, right? Artificial intelligence, cloud, big data. These are all trends that were growing, and I covered all these years ago, right? From going to Consumer Electronics Show for the last 9 years. You follow my newsletters, you know everything there is about these trends, and you made money off them. And they're continuing to grow faster and faster now. Because of COVID, these trends, they're on steroids. They're on steroids. And this growth is not going to slow for years and perhaps decades, because it's forcing people to change their behavior. And when they're doing that, they're realizing how easy it is to order stuff online. They know how easy it is. Well, I don't have to go to a conference. That's why I'm going to just go on Zoom. Did you see Zoom's numbers? And they're comparing this bubble to the tech bubble, right? Where you had irrational exuberance. These companies weren't growing sales like the way they are now. These companies weren't growing earnings the way they are. They didn't have cash flow back then. They had a web page, maybe four web pages, and a great idea. And these things are having billion-dollar valuations. I've never seen a company grow faster than those numbers that Zoom put up in such a short period. It's incredible. I mean, look at Peloton. Peloton's a name I wouldn't recommend. I don't think that's a secular shift. I love the fact that CEO went on. I love this part. The CEO's like, when Apple just announced their music service, right, for $9.99, Fitness Plus. That's a good thing. That's a good thing for the industry. It validates our thesis. When a $2 trillion company comes into your industry, not to mention their growth model, what is it based on? It's based on subscriptions that you're going to be charging more than what Apple is offering, especially for the real connected one, which is $39.99 a month. The rest of it, I think, is $12.99 a month. They have like 3 million subscribers. But the best is, they mentioned on the call, the growth model is to provide more content to people and more music choices. I'm pretty sure you're not going to be able to provide more content and more music choices than Apple's service. I'm just guessing there. I have a feeling. And that's their growth model. 80% comes from hardware, but their growth, the reason why Peloton's taking off is because of that subscription service, which just got thrown on the bus by Apple because everybody owns an iPhone or an iPad, most people, and it's going to be very easy for them to get on these new fitness apps, new fitness programs. I'd be worried about Peloton. I don't think that's a whole shit, but Zoom, CrowdStrike, Etsy, it's different with these companies. NVIDIA. But you're looking at these trends, the AI, the cloud, the big data analytics. They're on steroids. More people online than ever. And like I said, this growth, it's not going to slow anytime soon. When you have a behavioral shift, that's what happens. And what else are we seeing behavioral shifts in? Look at healthcare. Online doctor visits. Online diagnostics. I mean, I'm seeing this with my mom where it's a pain in the ass for her to go. I had to take her to the doctor yesterday for a checkup. She's doing great, by the way. Thank you for all the comments, concerns. Really, really appreciate that. I mean, we were told that she was going to die twice, and she's driving now, which is incredible. I mean, it's just really, really incredible and really great news. But I'm there with her when she's talking to her doctors online sometimes. That's a behavioral shift. Supply chains, they're becoming more localized. They have to, where so many places are closed off globally. I mean, you see Europe's, you can't go to Europe right now. You can't go to a lot of different countries right now. Well, what about your supply chains that are from different countries? You're forcing them to be localized. That's a behavioral shift. They're not going to do it just for now. When everything opens up, they'll be like, okay, let's go back to Europe. Let's go back here. No, this requires opening up new plants, hiring more people. Again, a behavioral shift. The insurance industry. And you look at property casualty, where these guys are getting murdered right now. And less insurance could result in consumers buying fewer assets like cars or real estate, which we're not seeing right now. But how much will that insurance cost? It's the greatest industry ever. It's not an insurance company. It's one of the only industries you got to put a ton of money up front for something that you think is going to happen. It's the greatest industry ever. But now they got screwed. You see a lot of insurance companies still down tremendously. They're coming back a little bit, but they'll find a way. They'll find a way to insure things that don't need to be insured, and they'll make money off you and not even go near the things that are risky anymore. Especially in this day and age where everyone's nervous, paranoid about everything. What about working from home? Another major shift. And companies are realizing how much money they could save instead of opening up how many offices in major cities. You look at the Fortune 500 companies. They have like 10, 15 offices in all the major cities. You don't need them no more. You know how much money that is? The leases, the rent. Do you have any idea how much that costs? I lived in New York City all my life. Holy cow. You can get whatever you want now. Hell, we're all at the red carpet if you're looking to buy real estate or lease anything in New York or some of these major cities. The entertainment industry. I mean, I don't know if you saw this. So they released a couple of movies and they did absolutely horrible in the theaters, even though they just opened up. Horrible, which is resulting in every studio pushing their pictures out further and further. We're going to launch this in December now, towards Christmas, in January, in February. You can keep going. March, April, May, June. The traffic is not going to come back like it once did. I don't care what movie you release, what Avengers movie you release. You better be putting that on streaming. And by the way, it's interesting that Disney still hasn't reported their streaming results for Mulan. I thought that they would throw that out there immediately because that would be a boom for their stock. The fact that they haven't said anything makes me worry. Well, maybe that didn't work as good as they thought it would. I thought it would work. Maybe not. Why haven't we seen those numbers? We see the box office numbers every place else all the time. They release that a daily basis, weekend, how much money these companies generate. Why is Disney not putting out that number? Interesting. Interesting what they choose to put out and not put out. They're putting out their subscriber numbers every time they're good in the middle of a quarter because that's what's driving the stock. Kind of interesting. What about digital advertising? You know, social media networks. We're going to see higher demand through social media. It's companies are going to do less advertising on billboards, streets, mass transit because nobody's really on the streets. There's not as much traffic in these places. Think about Times Square and having one of those beautiful, beautiful lighted up billboards. Hundreds of them. I mean, I don't even know how much that costs. That probably costs $1 million for 5 minutes. Who knows? Not that expensive, but you get my point. There's nobody there. Even for New Year's, how many people are going to go there? 25% of the audience? Maybe. All going to be wearing masks. There's going to be fights. There's going to be protests. I mean, that'd be crazy to go to Times Square to watch the ball drop. It's going to be a shit show. There's no way. It's going to be dangerous. It's going to be crazy. Think about that. Again, behavioral shifts. Look at the unrest across every major city. A lot of them are not safe right now, which is causing a lot of wealthy people to move out of these cities into the suburbs. Not good for restaurants. Parking garages. That might sound funny to people maybe in the Midwest, in New York City. They don't allow you to park any place. They'll have 10 different signs up, and they only need one sign that says you can't ever park there. But they'll have 10 signs that take you 15 minutes to read, and you think you can park there. Doesn't matter. They're going to give you a ticket. And they're going to tell you. To park in some of these garages is like $50 for a couple of hours. Gone. Gyms in major cities. The tax revenue for these cities. But this is how you must look at investing going forward. It's not a temporary shift. It's a behavioral shift. We don't see these often. I think text messaging. Nobody leaves voicemails anymore. My voicemail was just filled up. I had no idea. I don't listen to voicemails. If I have any investors out there, you're going to call me because my investors in CEO token, which is going to be launched in a couple of weeks, free trading. I talk to a lot of them. Don't leave a voicemail. Send a text. It's a behavioral shift. Social media. That's where everyone communicates now. In their groups, they email, they through Facebook. That's just the way it's done now. But it's resulting in trillions of dollars being shifted from the old way of doing business to new ways. And that's going to result in a lot of winners and a lot of losers. And the companies that are seeing this shift, if you look at all these high flyers, I wouldn't throw Tesla in there as much. There's some of them, but you're looking at those names I mentioned earlier. Earnings are exploding. Sales are exploding. Cash flow, subscribers, they're exploding. That's what the market wants to see. To say that this is in a bubble is absolutely crazy because these things aren't going to crash when you're putting up that kind of growth, those kind of numbers. Those are the businesses that are going to see the most demand. And it's going to continue and continue and continue. But again, that's how you must look at investing going forward. And if you figure out some of those new ways that people are going to generate business, you'll make an absolute fortune. And if you're looking for ideas, you could start by trying to create something for rich people that they all want. Because I can tell you, every rich person I know has one thing in common. They all want something, every single one. And I've talked to a lot of them, this podcast through my years, being this 25 years. They all want one thing in common. You know what they want? They want more. They all want more. And that brings me to my interview. An incredible person, first-time guest. His name is Chris Willis. He's a managing director, the government advisory and program delivery at Latitude Consultancy Limited. So basically, Chris His specialty, which he's been doing for over 25 years, is immigration. He helps rich people get dual citizenship. And business right now, no surprise, is booming. It's going to be a fantastic interview where Chris is going to break down the best countries that get dual citizenship, how much it costs, which varies tremendously from country to country, how bribes are quite common, or should I say donations. We cover that. But it's a step-by-step guide for anyone looking to get a passport in another country, which is very, very, very attractive in today's current environment of COVID and a lot of these major cities not being safe. So really, really great interview coming up. And then my educational segment, I'm going to bring in Daniel Creech to go over the latest news, including the massive M&A deals we saw this week, the strong earnings from some of these companies like Peloton, FedEx, break down a whole bunch of stuff. A lot of fun coming up in that segment. But first, let's get to my interview with immigration expert, first-time guest, Chris Willis. Chris Willis, thanks so much for joining us on Wall Street Unplugged.
Hi, Frank. Thanks for having me.
Well, you've been working in the immigration industry for 25 years, which includes helping people get dual citizenship. Let's start, since you're a new guest. How did you get into this industry? Because right now, I would think that business is booming for you.
Yeah, we've actually had a big intake of interest in people looking at having a second residence or citizenship. And we'll talk about some of the reasons why in a bit. But, I started off in this industry, 25 years ago, before it was really an industry like the way it is today. So it was a question of, identifying the programs, identifying the need of why people were looking for second residence or citizenship. In fact, I started off in London in the UK, where there's a big concentration of Australians, Canadians, New Zealanders, South Africans, etc., who are either looking to stay in the UK or bring a partner back to their home country. So that's really where it started. And then it evolved into doing a lot of Canadian inbound immigration, and then finally getting into all the different residence and citizenship programs that are available around the world.
Now, I said I would think business is booming, not just for the coronavirus that we have the most cases in the U.S., so maybe that might worry people, but we're seeing unrest in major cities where a lot of wealthy people are moving out. They're thinking, they're very scared right now. And I say this with Zoom technology. Sometimes it's better to be lucky than good. Just being in the right industry at the right time, that was the best way to communicate during COVID. But is it that simple? I mean, what are some of the main reasons Americans are applying for a second citizenship?
Well, I think what's happened now, Frank, is there's been a big reality check. People realize, I'm an American citizen. I've got my ability to live and work anywhere in the U.S. But what happens if I want to go to other parts of the world? Whether it's for leisure or for business purposes, or even just as an insurance policy, because as you say, the States is struggling a bit with COVID, and there's some other factors, civil unrest, there's concerns about the economy. There's a variety of reasons why people were saying, well, look, maybe I can be better off somewhere else. And, so look at other factors such as, what's the healthcare system like? What's the security like? How did this new country manage COVID? Because some countries have managed it better than others. And that's a factor a lot of people are looking at right now. But for an American, you're used to having the ability to travel the world. But what's happened now with a lot of these travel bans, the European Union being one, Canada being another, so two major destinations that Americans are used to traveling to, are basically saying the border's closed, unless you have status to enter the country. In other words, you're a Canadian citizen or a European citizen. And so the having that second citizenship can open up many more opportunities than being reliant purely on being an American.
So is that right? If I have dual citizenship, so if I have a passport in Europe or one of the countries in Europe and the United States, even though they have a travel ban, I would be able to travel back and forth right now?
Yeah, I mean, you'd still be subject to quarantine requirements, but you can at least enter the country. And I'll give you an example, because a lot of the popular citizenship by investment programs take place in the Caribbean. And you may have been reading that a lot of the Caribbean countries actually shut their borders, saying we don't want anybody in, we don't want anybody out, because we want to be able to contain the pandemic. And we can do that if they close their borders. So, many of the countries were saying, look, as of this date, we're shutting the border. So either you get in or you get out. You make that choice, right? So, because, places like the Cayman Islands, their borders have been shut since the beginning of April. So it's a very different phenomenon to go through when you're on, say, a smaller island. Then you got to say, well, okay, if I'm going to be in that place, can I conduct my business? For example, what the communication links like and that type of thing. But if you're wanting, let's say you wanted to go to Antigua in the Caribbean, unless you're a citizen of Antigua, they wouldn't have let you in. So you couldn't come in as an American, as a visitor. You'd have to actually have citizenship to be qualified to enter the country. In normal times, no problem. Americans, Canadians, Brits, they come and go. But with the pandemic, they've restricted it only to citizens. So if you don't have that, the privilege of having that second citizenship, you can't get in.
Wow, it's very interesting. So take me through the process. Say, Chris, I call you, I say, look, I want to do citizenship, and I know the rules are going to be different for each countries, but let's talk about the similarities between them. What do I need to do? Because when I'm researching this, it seems like I have to invest in something, either real estate bonds or make a typical donation to the country. Do I have to do these things? What's the process if I called you and said, hey, I want to do citizenship, I want a passport in the Caribbean?
Yeah, well, there's two things we have to distinguish. You have what's called residency by investment, and you have citizenship by investment. And the very quick distinction is residency means you have permission to stay indefinitely, but you don't qualify for a passport unless you meet the citizenship requirements. So we see that as being a popular option in places like Europe, and the Cayman Islands and the Caribbean. So that's one angle. The second angle is the citizenship, which is a direct application for citizenship. So you don't have to meet any residency requirements. Once you're successful, you're issued with a naturalization certificate, and with that, you can apply for a passport. So, the first thing we have to do is understand the client's needs. Saying, okay, do you need residency or do you need citizenship? Are you going to be spending time in that country, or are you just looking for the travel document? So once we can, whittle that down and decide, okay, this is the best course of action, then we could look at which program is going to be the most suitable. So in the Caribbean, they're similar but very different. There's 5 programs that currently offer a citizenship by investment program. And you touched on it that you typically have 2 options. One is you make a donation to the government. So it's essentially a transaction. You make this donation, you pass all of the due diligence and source of wealth, source of funds checks, etc., and then you would be granted your economic citizenship. But for some people, and more so for Americans, there is an option to buy real estate. So you can actually incorporate a lifestyle component as well. So, let's say, you're in New York, you're in Boston, you're in Seattle, it's winter, it's cold, and you say, look, I want to have my 2 weeks in the Caribbean every February to break up the winter. You could say, well, why don't we buy a villa in the Caribbean? And as a benefit of purchasing that villa, we can also qualify for economic citizenship. So some people are okay cutting a check and walking away. Others would rather invest in something and have an asset. So you have the 2 different options there. Certainly, if you do go down the real estate route, you're getting into a second negotiation with a developer. So that you'd have to go through the whole real estate purchase process for them. But then you can use that purchase to qualify. So again, it depends on what the client's after. And in some cases, there'll be a larger family or a group of friends who all pitch in, invest the minimum amount in the real estate, but use 4 or 5 of them to buy a larger villa, which they use amongst themselves.
Now, I don't know how much you could talk about this. I'm just curious because a lot of politics are involved here. And the donation part, I mean, is there certain nations where, is there a limit to that donation? Because I can see someone who's extremely, rich, a hedge fund manager saying, hey, I'll donate $10 million to build a library wherever and get approval. I'm not too sure if you could talk about that, but it seems to me that if it's based on a donation, the more money you give, the more likely it is for that country to accept you. Is there kind of truth to that? Or is that, again, I don't want to speculate or conspiracy theories, but I just want to, is this a level playing field for anybody or is it definitely skewed towards the extremely wealthy?
No, some of them will have minimum net worth requirements, which, could be as low as 2 million, so it's not excluding a big chunk of the population, it's certainly of your listeners. But it's very clear in terms of what the minimum is, and it's not at the 10 million levels. There are other programs where that can come into play in Europe, for example, but in the Caribbean, the least expensive is 100,000 US. So, once you add on your due diligence costs, your professional fees, your passport fees, etc., a single person is still going to be under 150,000 US to get a Caribbean citizenship in less than about 3 months. So, it's very affordable for many people. And the fact that the processing is quite quick, it does give you a very quick solution. It does give you that sort of plan B, that insurance policy, whatever you want to call it. Because, everyone sort of talks about, the what if, but that what if is right now. And that's why I was talking about the reality check a bit earlier, that people are realizing, hey, I didn't plan for this. This isn't part of my portfolio or my strategy. So let's tick this box. Let's get the second citizenship so we have another option for myself and my family if things get worse. And that's where I think there's a little bit of a uneasiness about the ability for everything to recover quickly in the United States. And that's where people are getting nervous and want to make sure they have this contingency.
Yeah, no, that definitely makes a lot of sense. Now talk about the countries. And I could be wrong on this because I always research everyone before I interview them. Of course, I research the industry. What are the most popular countries? Is it 25 in total that you could do this, or is it more than that? I thought I saw number 25 someplace. So what are some of the most popular countries that you're getting right now in terms of people asking for passport dual citizenship?
Well, I mean, in the Caribbean, you've got 5. And this is just for the citizenship program. So you have St. Kitts and Nevis, you have Antigua Barbuda, Dominica, St. Lucia, and Grenada. So, and as I mentioned earlier, they're similar but different, but they all have a donation option and they all have a real estate option. So then we start looking at, which countries can you visit as a citizen of your new country. So, for example, in Grenada, they have a visa-free treaty with China. So if it was important for you to travel frequently to China and not worry about visas, etc., then you would have visa-free privileges if you were a citizen of Grenada. So when people start looking at the number of countries you can go to versus the quality of the countries you can go to, that can be a determining factor. Because some people may say it's really important, I can get access to South Africa, and then when we do a study, we see, okay, which of these countries will give you visa-free privileges to South Africa? And there's only one, which is Antigua. So, then that could be a reason why they would look at one program over another. But I lived in St. Kitts and Nevis for 3 years and Grenada for a year, so I know that region very well. And part of my role is I also represent an industry body in the Caribbean as well. So there's the Caribbean I'm extremely familiar with, and it's a well-established industry now. Some of the programs have been around since 1984, others are only a few years old. So I think what happened is, once other countries in the Eastern Caribbean saw that St. Kitts and Nevis was doing so well, to the point, at its peak, it was nearly 40% of its GDP was coming in through this program. So there's a heavy reliance, on some of these programs. Just keep in mind, tourism is the main revenue generator, and with COVID, their season was wiped out. So they're having, luckily they have resources and reserves from this program to help deal with the loss of revenue from COVID. So there's so many different knock-on effects and benefits that come from this, especially when you're talking about smaller states who have limited resources that come as it relates to foreign direct investment.
No, and I can see just with the coronavirus, it's amazing how something like this just puts more things into action. Even when it comes to a company like Amazon, where you think everybody was shopping online, and now you realize how many people weren't, with all the boxes going to their house and how much things are easy. But when you're forced to do something like this, to rethink different things, I can see why business is booming for you right now. Now, we talked about the benefits. What are some of the drawbacks? Because when I look at this, we have to worry about double taxation. Laws by 2 different nations. What are some of the negatives of doing this?
Well, within these Caribbean countries, you're only taxed on income you would generate in that country. So, and obviously as American citizens, you're subject to FATCA, and you're taxed on your citizenship. So that doesn't really change things from a tax perspective, unless people are renouncing and going through that process. But that's just a very small percentage of people. With the however, there's also some tax residence programs, in Anguilla and in Cayman Islands, where they have a very attractive tax structures that for non-Americans, could be a solution for some people. But in terms of the drawbacks, one is if people are buying real estate, they have to hold it for 5 years before they could sell it on. So for some people, they're saying, well, what's the value going to be in 5 years? There's going to be more products on the market. And, am I going to lose on this investment? And also it's the management of it after that 5 years. Because most of them tend to be in hotel development. So if you had a share of ownership, or you bought title deed real estate in a development, what's my returns going to be if I put it in a hotel rental pool? Now, with COVID, for example, when the hotels have had to close, people are getting no returns. So there's a risk there, like you would have with any investment. But keep in mind, from a purely investment point of view, this certainly isn't the best out there, but the benefit is you're getting the second citizenship, right? So in case of, for those who don't want to just cut a check and walk away with a donation, if they did want to invest in something, there's going to be some risk associated with that because of some of the unknowns. And then apart from that, it's a relatively straightforward, it's an established industry. So there's not a lot of downside. Clients will have to go through strict due diligence, from the point of, as I mentioned earlier, demonstrating source of wealth, source of funds, going through any criminality, et cetera, to make sure that they're not going to be a reputational risk to the country or a threat to the security of the country. So that's part of the process. And again, as long as they can document all their background, then there's no reason for them not to be approved.
No, great stuff. So I would think that, I mean, you've been in the Caribbean, you've worked with the Caribbean, you work with Canada, of course. I would think it's easier if you live in America to get dual citizenship. What about people outside trying to get dual citizenship for America? Is that just like an impossible task? Is it much different? I could picture that being much more stringent, right?
Yeah, well, I mean, the immigration policy, so, many of the different categories have been suspended, but there are a few that are still open. It's not easy. I'm not going to lie to you getting into the U.S. In fact, a lot of the consular offices are only opened a few weeks ago, so it's not an easy process. And, the current administration is very much about, attracting the right type of immigrants. So a lot of the business programs, I'm sure you've heard of the EB-5, which had a lot of popularity, but that's now changed a little bit, so it's less attractive. And then you've got the E2, which is also quite attractive for entrepreneurs or people looking to enter on a temporary visa or what we call a non-immigrant visa, because the attraction there is that they're not then subject to FATCA because they're only a temporary resident as opposed to a green card holder or a permanent resident. So then they're only taxed on the income they generate in the U.S. So for some people, that's a better solution, for their overall structure. But you know what? The U.S. is always going to, have an attraction for people, irrespective of, COVID or whatever else is going on in the country. It's still very much, an attractive destination, just like, the UK is, just like other countries are as well. So, but as it relates to the United States, again, it's a residency program to get in. But what we're also seeing from some Americans is interest in some of the European programs. Ireland is one, there's a big affinity between the United States and Ireland. And they will say, well, look, if I want to get status somewhere else, I like Ireland because it's English speaking. I like Ireland because they have good beer and I can play golf, right? There's a lot of reasons why people, they may have some heritage in the country as well. Others are looking, there's citizenship programs in Cyprus and Malta, which cost a lot more. I mean, Cyprus, you're looking €2.5 million. And for Malta, they're just rebranding it at the moment, but you're going to be looking at about €1.2 million really for an application to go through. And that'll take about 18 months, where Cyprus is about 6 to 8 months. So it comes down a little bit to you get what you pay for, right? So if you want the cheap and cheerful, quick ones, it's the Caribbean. If you want the more involved, longer process, which let's call it a higher value European passport, then it's going to cost you more and take a little bit longer. So, like most things in life, as I mentioned, you get what you pay for, but there's different options on the table for people who want to have the second citizenship or residency. And this is why it's key that when we speak to people, we get a sense of their motivations, their time scale, their budget, and then we can guide them to see what the best program would be.
Yeah, no, I was just going to ask you about the cost and everything. So for Caribbean, how much did you say the Caribbean was? Because I know you said $1.5 million or more for some European nations, but the Caribbean, how much lower is it?
Yeah, no, it starts at $100,000 US, so it's very affordable.
Yeah, no, definitely.
All of these will have, you have due diligence fees, professional fees, passport fees, etc. But yeah, certainly south of $150,000 US for a single person. The larger the family unit, the higher the price. It'll go up proportionally. Again, some countries, they're priced more appropriately for families than single people and vice versa. But the other thing that's interesting here, Frank, is that some of the countries have a greater expansion in their definition of a dependent. So, as opposed to the standard, husband, wife, 2 kids, some of the programs will include the parents. If the parents are over 55, they can be included on the application, or in some cases even siblings. So if you have a brother or sister and they're unmarried and have no kids, then they could also, be included. So if someone says to me, this is my family structure and I want to include as many people as possible, then that will dictate which program might be more suitable over another. So, there's, as I mentioned before, they're similar but different. So they've all got these different tweaks that we can assess against the client's needs.
No, that's great. So I guess the last question here. So somebody, say if I wanted to go through this process and I called you and I just filled out all the paperwork, How long does it take? And is it much? I would think it's much longer now compared to pre-COVID, right? But what's the process, and how long does it take to actually get this finished? Is it like a year, 2 years, a few months?
No, it's actually relatively quick. In the Caribbean, it's around about 3 months. And in fact, they were very good in terms of dealing with COVID, because typically everything has to go in hard copy. Okay, so you collect everything, you get the hard copy form signed, all the supporting documents, and that gets couriered to the processing unit. However, they were then accepting soft copies due to COVID and able to at least open a file and start processing if there was a couple of documents that were maybe outstanding that the applicant couldn't get due to COVID. For example, a police certificate, because government departments were closed because of COVID. So they've been very, very responsive and prepared to deal with it. And so they didn't really miss a beat when it came to processing. So from that side of it, we were very encouraged. When you look at the European programs, they do take a bit longer. Ireland, you're looking at least 6 months for it to go through. As I mentioned before, Cyprus is about 6 to 8 months, and Malta is going to be about 18 months. So if someone's, for whatever reason has a time-sensitive matter, then the Caribbean, would be the logical one. We've even got a program in the South Pacific in a small island nation called Vanuatu, which has also been attractive for some people. So this concept of economic citizenship is continually growing. And I think, for a lot of smaller countries, they see their sovereignty as being an asset that people would be willing to purchase. And so, they're structuring different programs. We saw Montenegro in Eastern Europe launch their program last year, which is, sort of stopped and started, to come out of the gates. But their pitch, if you like, is, we're going to ascend to the European Union by 2025. So why don't you invest in us now while the prices are lower, and hedge your bets that we'll be a European country, in the next 4 or 5 years. And, we're going to see more of these programs evolve. A big thing of what I do is I work on our government advisory team here at Latitude. And so we're speaking, during COVID, we've spoken to over a dozen countries who are looking to either, tweak their existing program or start one from scratch so they can benefit from this ever-growing market.
So the last thing here, too, is because, and I really appreciate that. It's amazing how brilliant you are. You've been doing this for 25 years and answered every question seamlessly, which is, this is a subject that I'm sure a lot of people, the average folks, really don't talk about, but it's a direct indication. And that's the point of this podcast, where you want to see, what's going on with the economy. If more people find, it seems like that this is more like a precursor to how there are a lot of wealthy people that may look to move out of the U.S. or at least get that dual citizenship. So I guess the last question to you is, I saw on an industry site that demand was up 40% year over year. I don't know if they would talk about that site. Is it up even more than that? We're seeing like incredible demand. Put in perspective, I asked you earlier, but is this like the greatest demand that you've seen since you've been doing this? Or is it just, hey, business is pretty good right now?
Yeah, if you're referring to people renouncing the U.S. citizenship, that number is, it's maybe 5,000 or 6,000, maybe, certainly not north of 10 per year that would do this, because it's a pretty involved process that you have to go through. And, many people, once, for whatever reason, they will say, okay, I'm done with the U.S., I'm going to renounce. They'll say that to get some publicity and then don't actually follow through and do it. We see that usually around an election or around, other events that might happen. So that's growing, but it's still not significant in terms of volume or scale. And, there are people who specialize in that, and that's all they do. But no, in terms of the industry itself, as I mentioned before, we're seeing definitely a big spike, and that's for a variety of reasons, not just from the U.S., but also globally. Because this pandemic has really opened people's eyes and realized they're maybe not as prepared as they thought they were. And, even, having the almighty American passport in this current climate, it's not as strong as it used to be. Americans, I think, can get to about 86 countries now, without restriction, whereas in the normal times it would be 184. So, even the fact they can't even get to Canada, or to the European Union is a significant impact on people's ability to travel freely and enjoy the freedoms that are usually associated with being an American citizen. So it's, and as I mentioned before, if they did say, hey, I want to get out because of this, or I have a place in this country, I'm going to go and hunker down there during the next spike of the pandemic or whatever it is, if they don't have status, they're not going to be let in. And unfortunately, because of the way things are going in the U.S. with the pandemic, a lot of countries are not ready to open up their borders to Americans right now until it's really under control. as you know, there'll be a lot of different thresholds that have to be met for people to be granted access. And, I don't see that changing anytime soon because, it doesn't seem to be getting better quicker, in terms of not just in the U.S., but globally.
No, makes sense. So, Chris, if someone wants to get in touch with you, learn more about this, how could they do that?
Well, the best way is, my email is christopher.willis@latitudeworld.com. You can also go to our website, which is latitudeworld.com, and you can get all my contact details are there. But it also gives you a full breakdown of all the programs. We have a lot of videos. We have a lot of collateral on there, so you can do some research and see which program might be best for you. And then, then what we'll do is we'll just arrange a consultation, understand the needs, and then we can start seeing which programs could be best suited for somebody.
Well, Chris, thank you so much for coming on. I mean, give us a knowledge about this industry that few people talk about. I really, really appreciate it, taking the time, and hopefully you join us again soon.
Yeah, Frank, my pleasure. Like I said, as you touched on, a lot of people don't know that these programs or this option even exists. So it's wonderful to be able to share a bit of what I do every day with you and your listeners, and and hopefully it'll generate some options for people who hadn't considered it.
Yeah, I'm pretty sure it will. And thanks so much for being on, Chris. And we'll definitely chat soon.
Thanks, Frank. Speak to you again soon.
All right, guys, great stuff. Hopefully you like that interview. I understand when it comes to Chris, he's great at what he does. I understand it's mostly for the rich elite. I do have fund managers, doctors, accredited investors who tune into this. But this interview wasn't just for them or to generate business. Again, I don't get paid by anybody. It's for you to get a better understanding of the behavioral shifts taking place. Because if you understand that, you're going to realize that we're not in a bubble. It's going to influence numerous industries, just something like this, what you're seeing. I mean, more rich people leaving cities. There's so many different ideas. So many companies are going to get impacted by this. Sectors, individual stocks. And that's what you need to pay attention to. That's how you make money in this market. So let me know what you thought of the interview with Frank at CurzioResearch.com. It's Frank at CurzioResearch.com. Now, let's get to our educational segment where I'm bringing in Daniel Creech. Dan, what's going on, man?
Hey, man, lots going on this week. It's Wednesday and it feels like a Saturday already, for crying out loud.
I know. It was amazing. The news flow that we saw, walking in Monday, just the M&A especially. But I was told by so many technical analysts a week ago to sell, and this is for real, and the market's going to come down. And now these same guys are on TV saying, you need to buy as the market goes up, which is kind of funny. But I think the big topic here, even I was going over, is how we're not even close to being in a bubble if we compare this to other times, even from a valuation standpoint, trading at 25 times forward earnings compared to 44, 45 times during the peak, the dot-com peak. But there's a lot of positive things going out there, and it's not just the M&A deals, which we'll cover in a minute. NVIDIA, buying ARM Holdings, Oracle, TikTok, Gilead Sciences, Mimetics. Some monster deals out there, all announced this week. But, what are you hearing out there in terms of sentiment? Because, my argument has been that we're not even close to being in a bubble, and as long as we continue to see these growth within these names, within these industries, it's going to continue.
Yeah, with regards to the bubble, I think we really have to separate the crowd from the individuals, much like what we do in our newsletters and stuff. But you can pull out top headlines about, hey, the FANG stocks make up, a certain percentage of the S&P 500 and the Russell 1000. I think is it 24% of the S&P 500, give or take, is the FANGs.
FANG plus Microsoft, yeah, it's like 22 to 24%, depending on the day.
We basically, not to ask for a pat on the back, but we basically do the same thing every day here in research and figuring stuff out and trailing the markets. So it's funny because we're talking through the office walls here, and Frank brings up the NVIDIA $40 billion deal, which we'll get into in a minute. But I lead in and I said, who would have thought somebody do a $6 billion deal? Of course, $6 billion is nothing today. I say that, laughing, because we just throw money around like crazy not only in stocks, valuations, governments, whatever. But I just yelled to Frank, hey, man, who would have thought a $6 billion deal wouldn't even got any news? And Frank's like, what are you talking about?
I didn't even see that deal.
Yeah, Verizon bought TracFone for $6 billion. No big deal. NVIDIA's got the headlines with $40 billion. Frank comes back and says, yeah, but the best news of the day for me is Pfizer. I'm like, what the hell did Pfizer say today? So basically, we got everything going on. But to come back to the bubble, just to play devil's advocate thing. So, Mr. Curzio, biggest semiconductor deal ever, right? $40 billion?
$40 billion, at least one of the biggest. But I do know that there's no way this is going to get approved. There's no way this is going to get approved. It
Oh,
can't get approved. It's going to create a near monopoly in processing data center. People don't understand that. I mean, even the semiconductor people they're starting to complain about it now, but this is going to be accretive in year one. There's a reason why NVIDIA stock, they added $17 billion in market cap after they announced this deal, where you usually see when a company announces they're going to acquire someone, their stock gets hit. You don't go up 5, 6, 7%. But if this deal goes through, NVIDIA could double from here. I mean, they are going to own. They're going to be the biggest AI computing platform in the semiconductor industry. They're going to own it. They're going to be able to command their own prices. I would be surprised if this deal goes through, and it could. I didn't understand why SoftBank. I mean, maybe, people saying they're desperate out there, they're in trouble, but tech did bounce back a little bit, because they were bullish on tech when it, fell 10% a week or two ago. But they should be doing this for $50-60 billion. They're doing it for $40 billion. So I don't know what they're getting. Maybe they're getting money on the table, Maybe they get their executives have, going to be there for 10 years, a consulting agreement, whatever it is. But selling this for $40 billion is a joke. That's why NVIDIA surged. But to see this deal, I mean, and you mentioned the Verizon deal was under the radar, but you didn't even talk about what the Pfizer news was, because to me, the Pfizer news is a big deal because all of these vaccine companies, they all came together to say, hey, we're not pushing this. If we get a vaccine, we get, but it's going to be based on safety. And I do a lot of research in this sector, and Pfizer, I believe, is going to be the first to the market. They're going to be the first to the market with their vaccine. And the CEO came out and said, we're basically going to have a vaccine by the end of the year. Not that anyone under 40 should take it, but it's going to, sentiment-wise, even for older people, that's going to be a pretty big deal. And that, along with all these deals, I mean, look at TikTok. We looked at Gilead Sciences to acquire Immunomedics, and that's a $21 billion deal. And that was like, the third largest of the day that was announced on Monday. I mean, how crazy is that, right?
Yeah, and that was Monday, because guess what? Today has already taken place with the newest IPO. Have you been following Snowflake at all?
I know. I've been following it, how they keep raising it and raising it and raising it. So
I don't think it's trading yet, but it went from 70s and 80s. It was supposed to be priced at to over 100, and now I think it's supposed to set to open at over 200.
Is that really what?
Yeah,
I didn't even see that yet. Oh man, holy, that's amazing. Over 200. That's bad for the investment bankers. That means they really messed up.
Yeah, it was priced in over 100, but I was trying to take notes and everything was just changing. But it was hilarious because so cloud data computing, data analytics, obviously that's where everybody wants to be with work from home, everything being pulled forward. But the crazy thing there is Berkshire Hathaway and Salesforce.com are backing this. They each bought, I think, $250 million in the private placement. So, you get a headline like that, and to think Buffett and his managers buying more growth companies, that transition of allocating capital is going to be. But man, you throw those guys behind something, and I can't wait to watch that thing trade.
I'm looking at it right now. 2018, it raised $450 million, bringing the valuation to $3.5 billion in 2018. I mean, we're talking about October 2018, so less than 2 years. Less than 2 years. Now at $120 a share, which they're coming out at, but you said 200. I didn't even see that yet. That's incredible.
It's going to open.
Yeah, it's going to open there. I mean, you're looking at 120 to $33 billion valuation. If I knew it was open at 200 and I was the owner of, and I owned like 30% of this company, I'd sell like 25% right here if it's going to open at 200. I mean, it can go to 250, 275, but that's insane. I mean, it's insane. We all know the fundamental. We all looked at it. Even the investment bankers looked at it. And for them to be this wrong on pricing something this big that it could have came out at $200, holy cow. But yeah, it's interesting. We're doing this around 12 o'clock, and we do this in the middle of the day, as close as we can to being in real time. But let's see how it opens. Who knows how it's going to open over the next couple of hours? But I had no idea. And then you looked at today also, right, with home builder sentiment, right? I mean, it's, man, for those of you that own a house in your neighborhoods, the value of my house, someone across the street sold their house just a week ago. And the value of my house is up probably about 20% over the past 9 months. 20%. Like, I didn't think it's amazing. We have more square footage. I think we have a nice. I've seen their house. I think ours is nicer in terms of the spacing, the outside, the backyard and stuff. We have a pool, and it went out. It's fetching 20% more. So I mean, home builder sentiment. You saw it, right, Dan? I mean, we looked at Toll Brothers, we look at Lennar, we look at them, but now the sentiment comes out. I mean, it's pretty crazy.
Yeah, and that I throw CNBC under the bus here a little bit, but everything has to be clickable, on the headline. So I understand that, but everything turns into, oh, well, is this a red flag? Or, these all-time high sentiments and stuff. Well, when you look at what's driving the sentiment behind it, it shouldn't surprise anybody. We've talked about, I think you talked about in your opening on home builder sentiment. Dollar Stock Club last week, we threw a pick out there for playing the home builders. When you have basically zero interest rates and a demand for people that make a lot of money that can now live anywhere they want in the country, that's going to be a huge sentiment or path going forward. And I don't understand why. I don't look at that as a sign at the top. I look at that as a trend and more of a confirmation than anything else.
And it's a good segue into what we saw on TV, which was Chamath is one of the greatest technology investors. I mean, he's incredible. I told the story that I was at an investment conference. I don't know if it was Seeking Alpha, something. I forgot what it was. Very famous investment. It might have been an Iris Zone conference. And he went up there and said Amazon's going to have a $3 billion valuation when it had less than, I want to say about a $350 million, $1 billion valuation. So he says it's going to be $3 trillion. And David Einhorn went up after him and basically made fun of him and said, yeah, I'll take that bet. You have no idea what you're talking about. And sure enough, and this was about 7-8 years ago. And we know it, wow. I know his performance has been a little bit better lately, but yeah, just, anyway, but now he came out and he's backing a company called Open Door through a SPAC. Pretty interesting, guys, right? Because I've been talking about security tokens for how long, saying this is a better way to bypass the system where it's better for investors, it's better for issuers, where it costs a lot less. Now we're going to go free trading in a couple weeks on a global exchange. Going to be the first token in the world to go free trading on a global exchange. It's going to be available to retail investors, mom and pop investors. Very proud of that. Almost done. Very, very close. But SPACs is something similar. Chamath was going over that. I love the fact that Andrew Sorkin put his feet to the fire when he was asking him about fees, because he said, I put $100 billion into it, and he's like, well, what are the fees? Well, it's tens of millions. Well, what is tens of millions? And Andrew kept pounding it, which I was surprised because they're sponsoring their Delivering Alpha conference, and Chamath is going to be one of their biggest speakers, and he was kind of going after him, and he wouldn't let him off the hook. But the amount of fees that they're generating still, that's why security tokens, I think, it's just a matter of time before it goes crazy. But yeah, I want to get your opinion about that. I know you're familiar with that deal, but and SPACs in general, but that was pretty crazy. For him to get on TV and then get ripped a little bit, it was interesting.
Yeah, I think I'm going to come to the defense of a multi-billionaire who needs it.
yeah.
The only thing bad about Chamath, and I'm probably butchering that because I'm in the middle of researching this guy a lot more, just because I know his track record and stuff. I mean, the guy's a partial owner of the Golden State Warriors NBA basketball team, but I do say he didn't answer the question. He didn't answer the question on fees, which, to come to his defense, he probably doesn't know because there's probably incentives.
He was saying he wasn't sure.
Yeah, and I'm halfway joking with that, everybody. Of course, I don't mind the guy getting paid if he's doing something where, like, I hate the idea if they're selling it as a cheaper, better way to help everybody, and then they're backdooring all these ridiculous fees. We'll have to dig through a bunch of filings and such nature. So I'm not, I don't have any problem with anybody making money. I know Frank doesn't either, but it was interesting how he did dodge that question. The other thing to me about it with the Open Door thing, it's $1 billion deal. I don't know how many group of investors he has, but the cool thing is that Wall Street is changing. So to Frank's point about the security token industry, I think it's great to see Wall Street go away from the typical Wall Street IPO. Obviously, COVID, cuts down on traveling, but these SPAC, special purpose acquisition companies, reverse merger or direct listings we've seen kind of pick up some steam. So I think that change from a macro level is great, and I think it's only going to lead to the security token. We need to get Chamath on the security token path is what we need to do.
Yeah, I know, that would be nice. I mean, I think it's just a blip on the radar for him where he could probably take money out of his pocket and buy the whole industry. Yeah. But that will change, just like it changed in a lot of industries. But he is an incredible investor, and I'm a big fan of his too. I mean, he never really tears people apart, and I've seen him get tear apart so many times, and he's been right so many times. And this guy just has a knack when it comes to technology, knowing what's going to work time and time again. And you don't see him have a lot of losers. We all have losers. I could name a lot of losers for a bunch of great, smart people out there, and they have many more winners than losers. I don't see this guy having too many losers. I haven't seen it, but he's just into the right companies at the right time. Remember, SPACs are different from IPOs, where if you're looking at this IPO with when you talk about Snowflake, it's coming out if it comes out at 200, it's going to be what, 160, $170 billion plus valuation. These companies are pooling their money together with SPACs and saying, we're going to buy a company over the next 12 months. And if we don't, you get your money back. Over the next 12 months, we're pooling our money together. Well, basically, they'll take over a company, and it'll just be a holding company on the exchange, a New York Stock Exchange or whatever it is. And they'll find a growth company taking over. It happened to be Open Door. And then, boom, they just take over the whole entire company, incorporate everything, and it happens much, much faster. But this is a way where you can get into these companies at a much earlier stage than buying the snowflakes where it is. So there's a reason why Goldman Sachs, all the investment banks are doing SPACs now. And pretty soon, all the investment banks, they're going to be doing security tokens as soon as, because all the infrastructure is there. We're seeing T0 light years ahead of everything. But there's one more subject before I let you go, Dan, I want to talk about, because we're looking at the banking sector. Not everything is great, guys. So we're seeing this shift, right? The behavioral shift I talked about in some industries to other industries. And banking is getting smoked. Traditional banking, right? This is the Citigroups, the JP Morgans, Wells Fargos, not the Morgan Stanleys and not the Goldman Sachs investment banks that make a fortune off of trading and liquidity and volatility. These companies are linked to interest rates. And when interest rates are really, really, really low, that hurts their net interest margin. And they're going to stay low for a long time. And now Citigroup is a company that used to be in our portfolio. We sold at a great time before all this nonsense. We sold a lot of our stocks before in February, before the market crashed due to COVID. I love Citigroup because they were buying back their stock and raising their dividend to the point where they were going to buy 60% of their float, meaning they didn't really have to do anything, just have earnings stay the same relative. And you're looking at a company where you would see this grow tremendously. At least the share price will go tremendously because you're just taking all those shares off the market. Now that you're no longer to do this, the Wall Street Journal also reported the company could get reprimanded for failing to improve its risk management systems. And I mean, we've seen a major sell-off in Citigroup, and, the financials in general, just refuse to participate in any kind of rally we have, right?
Yeah. What kind of move is that? You let the next CEO take over, and then the headline comes out about how you might get fined, and the government's even more pissed at you.
So she took over. She took over, and then
I apologize. I don't have her name.
Yeah, no, but
it was a big deal. I mean, they named a new CEO, and then bam, you get all this. Then the stock drops 10% in 2 trading sessions, give or take.
I mean, so basically, she takes the ring, and then she's forced to let people go, and then you're seeing this stock really, really get hammered. So, it's just really, really crazy. I mean, Jane Fraser's name, and you have Michael Corbett, who's been there for a while, a very, very smart man, who's now doing personal things and stuff like that. But still, when I look at Citigroup and I see this thing come down so much, I mean, to me, it looks like Wells Fargo, Bank of America. I mean, what about their risk management systems? But it is interesting, guys. That's what this podcast is about today, is about this behavioral shift we're seeing. And it's going to result in some sectors doing great and other sectors doing terrible. The ones that are doing great, they're seeing tremendous, tremendous amount of growth. And for people to say that's in a bubble, like that's not going to continue, they're crazy. We only have 16% accounts for e-commerce sales when we're looking at the total retail sales, over $5 trillion in the U.S. annually. It's only 16%. And it went from 11 to 16%. And that's going to stay very, very high now, I would think. And there is these major shifts, right, Daniel? I mean, you're looking at a lot of things that we talked about here. There's going to be clear winners: the Gilead Science, Immunomedics, biotech, healthcare. But then you do have, the banking sector and even commercial real estate and some of these REITs, right, that don't look too good.
Yeah, 2 quick things on that. For us, selfishly, it's going to be great to see separation. I mean, we have newsletters, we're stock pickers, so we want to try to, do the homework and figure out, hey, this is going to help these groups of companies, such and such businesses, and we want to ride those trends. The interesting thing on the finance for the banking industry is from your major shift from your traditional banks like Citigroup you talked about to the trading banks like Goldman Sachs. This volatility, this environment should be great for them going forward. So, if you have a solid company, especially as an investment, and you believe in the management team, you want them to have the stage of opportunity. And if you're Goldman Sachs, your investment bankers, you're trading, this is your opportunity to perform. I mean, you want this. You want volatility. You want a lot of things moving. So that should be good for them. The other thing, real quick, is through stock screens and just insider buying. You can look at insider buying on FinViz. I know Frank uses that a lot as a free site for everybody out there. But there's been a lot of insider buying on regional banks. And I don't mean a lot of insider buying as in money amounts. Some of these are $50,000, $150,000 purchases. Not that that's nothing. But what I think interesting is the amount as far as the frequency. There's a lot of insider buying as far as transactions go. And what's going to be interesting to dig into that is that regional bankings in certain sectors, if you're in the Midwest, if you're on the coast, you want to look at exposure to flooding, fires, all that kind of stuff. Where their loans out? Are they agriculture? Are they oil and gas? But that'll be something. I mean, obviously, banking is a huge part of the economy, and it'll transition. It's not going away. But those are a couple of things that are really going to be good on the path of going forward.
No, I love that. I love that idea too, and it's good that you saw that. I didn't see that, but I would look also when it comes to regional banks. Look at the ones that have a lot of exposure to real estate, which is completely booming right now. And I bet you that's where you're going to see a lot of insider buys, because I covered regional banks before, and some of them have leverage to very, very high-profile areas, whether it's New York, New Jersey, California, just different places in California, but just where you're seeing huge demand, especially in states. I would look at regional banks in states that have no income tax. What is it, 6 or something? I think what we saw, right? I'm not going to try to name them. I don't think we could try to name them and mess it up completely. I think it's Florida, Texas, Wyoming, Nevada. I think there's 2 more, but I don't.
Utah?
No, not Utah. No? I don't think it was Utah. I think it was something on the East Coast, though. It might have been Virginia or something. I don't know. And it was another one.
Tennessee. It's not on the East Coast, but I think it's Tennessee.
Was it Tennessee? I don't know.
Subscribers will
so we mess up sometimes.
Yeah, email us, tell us how terrible we are.
Well, so guys, let me know what you think of this format. I want to really break down the news. There's so much going on. This week was incredible in terms of how many deals, the SPAC announcements. There's just so much news flow. And I love giving you an opinion that we talk about every day. When I walk into the office and Daniel and I just, shoot the shit, talk about all the stories and everything. And I just thought that would be pretty cool to really have this, be taping it, you guys listening to what we're thinking almost like on a daily basis, because all this stuff happened like in the last 2 days, 3 days. So let me know what you thought of this segment, FrankCurzioResearch.com. And Daniel, thank you so much for joining us, bro.
Hey, great to be back. See you soon.
All right, guys. So look, that's it for me. You want to see more of me? Unfortunately, if you want to see my face, which I know not a lot of you probably don't want to do, and you like the voice instead. But if you do, Curzio Research YouTube page, we're going to start videotaping all of our segments, our whole podcast. We're almost there. Really excited. It's getting some backdrops in, but it's going to be really, really cool. And even guests, we're going to try to get guests in-house and everything. And you're going to see more and more guests like Chris, new guests that just can provide different perspectives of different things. It's where we all learn. So, it's going to be really, really cool going forward. Also, feel free to follow me on Twitter. Try to be a little edgy. But you can tweet me at Frank Curzio. And last thing here, I'm getting lots of requests for our Curzio Venture Opportunity promo. And there's a reason why, because you see how bullish I am on stocks, how it's great. I'm telling you guys to buy on pullbacks. But what I'm seeing in small caps in the industries I'm talking about that's seeing the behavioral shifts, there's a lot of names that haven't participated on the way. And you're starting to see a lot of money pour into these names. They're transforming their businesses. They're lowering their costs tremendously, so they're more efficient now, and they're going to more online operations. You're seeing demand from the last quarters because of COVID. They're still down 30, 40% off their highs. We just recommended 3 of them. We're up on all 3. However, they're still below the buy up to prices. So you're going to see a lot more recommendations. I'm seeing a lot of great, not the whole Russell 2000 index is going to go up, but there's a lot of companies that are growing much faster, twice as fast as the overall market, that are not that expensive, trading below the average multiple for the Russell or the S&P 500. So I'm really excited about this. Seeing lots of new names out there. But if you want to take advantage, we're not going to have that promo up. We don't sell this often. It's a 6% discount. You go to our website, CurzioResearch.com. Again, we try to offer the best deals for you guys. Love you guys. And we only sell our products when I think it's a really, really great time to buy them. And there's a lot of names that are under our buy up to price that I really like. And you're going to see a lot more names come in because I'm screening, and you're seeing dozens and dozens of names come on my list. Over the past month, actually, I've had more ideas than I've had normally for this newsletter, where sometimes it's difficult to find them. But now, even if you're subscribed to it, you know what I'm talking about when I'm doing the videos and you're seeing just insiders buy and these stocks off their highs. There's just a lot of really good stocks out there, small names you never heard of that have tremendous upside potential, still well off their highs. So if you want to take advantage of that, again, it's 60% off. We're not going to do that for too much longer. So if you want to take advantage, get a lot of questions on it, again, you can go to our website at CurzioResearch.com. So guys, that's it for me. Thanks so much for listening. Really, really appreciate all your support. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.